Welcome, everyone. I'm Greg Schnell, the Canadian technician, here to host the Market Buzz. This show looks at weekly setups across the U.S. market. Using the tools available on StockCharts, we'll look for long time frame trades. Please subscribe to my articles, my Twitter feed, and gregschnell.com. Lots going on out there. I am going to take this week or this edition of the show and talk about the changes that StockCharts has made on the SCTR ranking. Briefly introduce it for those who don't know what it is, and then point out some of the changes that are being made. There's some really great ones and ones I've requested, and am thrilled to see them take place. So this is pretty exciting. So we're going to cover off the StockCharts technical ranking system, how it's calculated, why it's important, and then we have new StockCharts technical rankings for the Dow Jones US indexes, and so there's roughly 104 of those, and so they all have scooter rankings, so that's pretty exciting. I want to show you how I use the SCTR and kind of the lessons that I learned from it. It goes against a lot of the conventional wisdom for things like buying fundamentals, and you see a strong stock like a bank or whatever. Well, the SCTR does a good job of explaining how that stock ranks, and I think it's really valuable. So hopefully by the end of this, you'll be as excited about the StockCharts technical ranking as I am. So first of all, how is the StockCharts technical ranking calculated? I like to think of it as a sports score for stocks. So what we look at, so as an example, the Calgary Flames have X wins this season and X losses. Well, we do the same thing with stocks. Which stock is pushing up faster and is farther ahead of its moving averages, and keeping, so we have an internal measurement that we calculate how well the stock is doing, and then we compare how well it is doing to its peers. And the way we do that is we have long-term indicators. So we have the percent above and below the 200-day moving average and the 125 rate of change, and that makes up 60% of this calculator. But I don't want to get I don't want to bore you with all the details, but the big thing that this is amazingly quick. It will show you turns in the market quite quickly, and I think if you go look, you'll find out that there's some really nice charts out there. And hopefully through the show today, I'll show you that even with these sorts of heavy weightings on long-term indicators, that this is a very responsive system, especially for entries. Medium-term indicators, we have percent above or below the 50-day moving average and the 20-day rate of change. And then short-term indicators, they only weight 5%, but they're almost like accelerants. So the 3-day slope of the PPO histogram, and then the 14-day RSI. And so what we do is we take all of these 6 factors and say how strong is the stock compared to its moving averages and rate of change. And then we get a value. And then we take that value and we rank it against all of the rest of the stocks in a group. And the important thing is in a group. And the reason I say that is if you don't control the group size, so you take all the stocks in the stock market, what you will find is that most of the stocks like technology stay in the top half or whatever. And so the bottom half is really not that helpful. When you do that within a group, let's say the large cap, the 1,000 large cap stocks, and that includes some of the foreign ones like Unilever and Royal Dutch Shell. When you include those stocks in the bucket, the one thing that happens is stocks will move in and out of outperformance, and that's very helpful for investors like us. So I want to make this point abundantly clear that the group size, or having these 3 groups or 4 groups that we use at StockCharts, is a really big part of the deal. And what we do is we have a large cap, small cap, large cap, mid cap, small cap, and ETFs. And then we also have some industry group analysis that I'm about to show you today. But what I want you to understand is that these aren't day trading systems. These are very helpful for finding long-term trades, I think. And so as an example, right now, this is the SCTR reports for large cap stocks, and maybe I should show you how to find that. There's a couple of different ways. One is from the dashboard over here on the left-hand side, and you can see that we have these summaries, and then we have the SCTR report. And when you click this button, it's going to bring you into the large cap. So if you're a Canadian investor, you have to go down and find Toronto. If you're looking for ETFs, you have to go grab this ETF button. And then, so that's one way to get here. The other way to get here is over on the charts and tools. And if you look over here on the right, you'll see this SCTR reports. Again, go back there. You'll see this SCTR reports. And that can be very helpful just as a quick way to get in there. And again, it takes you to the large cap stocks, so you have to go pick the mid caps or the small caps if you want to see this. And one of the things that really shows up quickly, so as an example, here's large cap. What you see is we've got a lot of semiconductors in here. We have one healthcare stock, another healthcare stock, some material stocks, consumer discretionary. And you see this list. When we go to small caps, what jumps to the top is all of these healthcare, biotechnology, pharmaceuticals. So if you want to aggressively trade the market, this is one of the best tools that you'll find to help you. And so what you see, in this case, the stock went ballistic, but not all of them are ballistic moves. Well, the ones that we're looking at right now are. But there's a lot of these good ones, like this one. This Kodiak's been climbing for a while, and you can see it was 750, broke out of a range, pulled up, and now it's worked its way up over $22. Pretty strong stock. So really quick, by looking at these SCTR rankings, you can get a feel of what's going on very, very quickly. And again, if you want to go trade some particular industry group, you can go into, let's say, gold mining, and here's Eldorado Gold, and you can look at the chart very quickly. The idea is that these SCTR numbers show up really, really quickly and help sort. So if I was going to go look at whatever biotechs and I don't know anything about them, this is going to put them in the order of best price action first. And if we change the sort order down here, we're probably going to find some biotechs that are not so great. And as you can imagine, this chart's probably one to avoid. So when you see a very low StockCharts technical ranking on a biotechnology stock, it's probably not one to get long. And I mean, these things can go ballistic at some point if they get a phase 3 trial or some trial or whatever. But more importantly for you, you want to find these breakouts and then work with them, not against them. So don't bet on a weak stock being the big winner, bet on a strong stock getting stronger. And so one of the critical components of the SCTR, again, is this bucket size, and I want you to really focus on that for your trading style. If there's something that you like, then if you like these mid caps. So as an example, here's Roku. The different. One of the things about the SCTR ranking, I find it helps more on the buying than on the selling. And so here's Roku, and what you see on this stock is it had a big run up, then a pullback, and now a run up. Well, when you click on this stock, and I'm just going to open a separate tab, what we see, I'm just going to separate my relative strength compared to the S&P 500 from the Scooter ranking. So here's the Scooter ranking, and it's pinned right up near the top. And as you can see, the stock in this period here was wobbly, and then it got it back up here, and it stayed up here for 6 months, and it's been quite a performer. Then it had a brief dip, ran up, and I think it was after hours today that Roku reported. But the point I want to make is when these stocks do well, the Scooter ranking isn't the best selling tool for me. I would tend to use this relative strength line better. But I think for entries, this is a pretty nice tool. I mean, here the stock was outperforming really well, fell down hard with everything else last year, and then ran up, and you can see the Scooter rankings starting to say the stock is, the price action's moving fast, getting back above the 200-day, and starts to get up here, and it wobbles up here, and again it pulls back. And so compared to its peers, it's not doing as well. And then it takes off. And when it takes off here on this jump, it stayed up there for quite a while and went from $70 to $176. So the scooter ranking, when you keep track of how it's working, it's gonna keep putting strong stocks in front of you. I think that's one of the most critical components of the indicator. And again, this calculates the price of the stock. This calculates the momentum of the stock. This calculates the volume of the stock. All of these things are internally related. When we get to the price action to this relative strength, we're comparing it to one thing, the S&P 500, and we're saying it's either outperforming it or underperforming it. The S&P 500 is the average of the top 500 stocks, right? It's not the best 500, it's the average. Now, it is market cap weighted, so if you have a big stock like Apple or Amazon or Microsoft, they have more weight in the index than the smaller cap stocks. But the point I would like to make is these SCTR rankings, this actually gives you a percentage ranking against all of its peers. So it's not just the S&P 500, it's wherever this stock fits. And I think in the case of Roku, it was in the mid-cap group. But what we see here is the stock is outperforming its peers for long periods of time. And that makes it easier to own, knowing that it's being one of the top performers. Now, if I go to my to my weekly chart, I've got the full detailed table up at the top here. And so it says the SCTR is in the mid caps and it's 99.3. So for me, the way I would treat this stock is I would draw a trend line under this relative strength. And if it stops outperforming here, I would be out. I would not try to see if it was going to be able to keep running. I would move away on that sort of thing. And if the stock can't keep outperforming, then I want to move on and find something else. And I think this is a critical component of the SCTR, is that it helps you find great names, but it's not necessarily your best sell tool. I think there's other tools out there, and we could do another whole presentation sometime about that. But the goal of the SCTR is to bring strong stocks to you. Now, I use the SCTR. Well, I want to show you one more thing, the industry groups that we have. So if you go take, I have a listing of industry groups I've set up. Now, this also has different kind of general groups. So if I put in retail here, so we have a retail index, and this is a broad retail index, but we also have all of these different types, broadline retailer, specialty retailer, apparel retailer, and we have an industry group for each one of those. So this big one doesn't get a scooter ranking, this retail index, but all of these other ones will get a scooter ranking. So if you're at such a high level, then you're not going to get the specific SCTR ranking. So just when you go to some of these indexes, they might not have it, but the reason is because we've taken the broad retail and we've sorted it out into these different groups. Okay, so hopefully that helps you understand why sometimes you might have an index that still doesn't show a scooter ranking. But the point I want to make here is now, if I just get rid of this, get rid of retail and put them all in this basket together, I have an old industry groups list that I made. You don't have to make that anymore, because now you can go to the StockCharts technical ranking and you can just click, instead of large caps where it comes in at, you can tick off the US industries group. And now by clicking on this SCTR ranking, home furnishings are doing great. So now you can go over and highlight that. It's just going ballistic. Nice. And computer hardware, that pretty much maps Apple. Here's fixed line telecommunication. Chart's okay. Looks a little bit like AT&T and Verizon. Industrial suppliers. This chart is just starting to break out here in the last couple of weeks. So I think that's a pretty key component. And seeing that start to happen is pretty nice. We can go open this chart in a new tab. And I want to go grab my weekly. And what we see on this chart here is momentum is starting to improve, picking up here. It's breaking out to new 52-week highs. the scooter ranking for this is improving, and as you can see, it goes through periods of outperformance and then it sucks. You'd much rather be in something else. This can help you with that trend. Now, if we go to, back and we see Apple's computer hardware, CR is the ticker, so we'll just go. Now, what we see on this one is for almost 2 years, it was a pretty darn good one, and then it fell and became one of the worst, and then it started to improve again. The idea being that if you need to do sector rotation, you don't want to rotate. I mean, it's okay to rotate into these weak ones when they're turning up hard, but you do not want to rotate into something that's average. And the problem with average is you're just not going to outperform. So you need to either take something that's terribly oversold, that is now becoming much better, so it goes from worst to first. That's a harder bet, and it takes a long time, and you put up with a lot of chop in here. Or you buy these big names that are breaking out. So as an example, back here, this name was just starting to break out. Look at how smooth this run is in here for almost 2 or 3 years. This was a bigger pullback, but in the early part of this, while it was just breaking out, this was really relatively smooth. And the scooter ranking suggests that it's one of the best groups out there. So you can get that sort of information from the scooter ranking. Now, when it's out of favor, and as an example, let's say we go to retail and all 5 of the retail groups are out of favor, what does that suggest? Well, if you're a value buyer, you might want to go hunting there. But if you're a technical trader, you're going to wait until those charts start to improve to get back into that industry group. And then that can help you, so you start to see the group move up. Currently, one of the groups moving up right now is the industrials. And so when we see so if I just put in the word industrial, spelled right, industrial, it shows 4 different groups, and you can see the scooter rankings are pretty good, actually. So this chart, industrial and office, reads diversified industrials breaking out to a new high right now. U.S. industrial machinery, pretty nice chart. And then industrial suppliers. So when you see these scooter rankings, it can help point you in the direction of industry groups that are moving, and I think that's a critical component. So the main thing I want you to understand is, first of all, these other indicators, for the most part, are comparing the stock to itself, and it's saying, is the price action improving or not improving? But what happens when we compare it to the S&P 500, which is an average, is that's one piece of information, but this actually tells you how good it is above average. And so, in this case, it's still improving compared to the S&P 500, but it's still only behaving better than 75% of the stocks. Other stocks or other indexes are behaving better. So in this particular case, when it's pinned up near the roof, this thing actually moves up quite aggressively, and price action is saying that. These are helpful hints for us, and when we can see which ones are outperforming, that's a very beneficial look. So getting back to the overall list, semiconductors have been behaving really nice. Banks have started to break out recently, and so you see this breakout. Heavy construction starting to break out, so that's going to be Caterpillar, Deere, these big companies. And anytime you see a group like this and then you want to know what's in the group, okay, that's a really easy thing to do at StockCharts. I'm just going to go grab a tab here. We're going to go over to either charts and tools, or you can do this from the dashboard as well. But here you go into sector summaries. Let's say you want to go into industrials, and now within industrials, whatever, it's industrial suppliers that you want to go look at, just as an example. Now you can go in here and you can rank by SCTR ranking, and it brings all of the top companies right to the top of the list, and you can quickly take a look. Here's Lawson Products. I don't know what they make, but obviously some investors like it. Site One Landscaping breaking out. And here's Fastenal. The chart, went ballistic about a month ago and is now moving up really nice. Grainger breaking out to new highs. So the whole group is starting to break out. That's very helpful information. And yet you want to avoid this bloom energy down here where it's not really, following the move of the rest of the industry group. So when you see the scooter ranking for the group, and again, we're over here, we're looking at the SCTR reports for US industries. You go in and you see some particular group you want. You go to sector summary, so I'll show you how to get to it on the dashboard this time. So you go in here on sector summary, and when you click in, now it brings up the different groups. We know that we wanted whatever industrial. If I wanted technology, I would click in here. But the point is that you can just keep clicking down. You're drilling down to find which semiconductor groups are doing well, and you can sort them by intraday, 3-month. You can sort them by scooter ranking, whichever you prefer. But what you're trying to find is stocks that are strong. Now, the one perspective that I think is important is if you're an average stock and you start to outperform, you need to go through the 75 level. So one of the conditions of a leading stock is if it's going to be outperforming, at some point it has to go from average to outperform. Even if it's an IPO, it's got to start somewhere, and as it starts to take off, the first few weeks or months it won't have a scooter ranking because of how it's calculated. But once the stock has enough information for us, then we can calculate the ranking. If it starts to trend higher, this can be really important, and we can help pick that up. So I want to get into some specific charts and show you a couple of things. Here is Walmart, and you can see that for the most part, actually, I'm going to go to this Apple chart, Google chart. And what I did here on the Google chart was I put a line at 25 and a line at 75. And what this says is Google rarely ever is a terrible stock. It's usually between 25 and 75. Well, to me, that's basically following the S&P 500. And what you can see here is it never really kind of changes this line. Yes, it starts to kind of look like it's outperforming, but it doesn't really do much. And it doesn't stay up as a great stock very often. It did this way back in 2015, but hasn't really done it for a long period of time. So in general, is Google a great stock? Well, it's actually a pretty average stock. It just tracks the S&P 500 and oscillates between these two lines. If I go look at NVIDIA is different. It was a wonderful stock for a long period of time. And then the scooter ranking started to tell us that this sort of outperformance was starting to get weaker, so the stock started to decline, and then it fell apart. And then it was terrible for almost a year, and now it's starting to improve again and getting back up into the top range. It still doesn't tell you what it's going to do tomorrow, but what it does tell you is currently it's one of the strongest stocks out there with a scooter ranking of 90. And if you're a momentum investor and you know that the momentum is improving on this stock because it went from worst to first, if you see the stock momentum improving and it keeps trying to get back into this outperformance area, that's a pretty good clue that things are getting better there. So I like to watch them when they're terrible and starting to pick up, especially commodity related stocks. And I also like to look at them as they're going from below 75 to above 75. And I get more excited when I see a whole group moving up. Well, now with the SCTR ranking for the industry group, we can just go straight to the industry group and say, okay, what's the SCTR ranking? Oh, banks are starting to break out. Okay, well, let's go look at JP Morgan. Okay, the scooter ranking is moving up above 90. That's pretty cool, and it has been below that for 2 years. Maybe we'll just zoom back into a normal chart here. But it's starting to break out, and the scooter ranking shows it's better than it has been for over a year and a half. And then we go to Bank of America. Oops. Be better if I typed it all. Bank of America. And you can see this scooter ranking starting to go above 75, breaking out of this base. And just, there was no reason to enter the stock here. You kind of got it whipped in and whipped out. So it's still hard work. But you can see it was an average stock, and now it's starting to become above average. And then we go to Wells Fargo Corporation just to see what that one's doing. It's also got a new CEO, and now all of a sudden it's going above 75. Nice. Here's Citigroup. And we can see the Scooter ranking hasn't really started to pick up yet. It's breaking out of this base. It's trying to get above 75. We want to see that continue. So as you work through these, it gives you an idea of where the strongest stocks are. Now we can go straight into the sector summary and look directly at those banks and see which ones are starting to work, and it will sort them all in a proper order. Again, the way we would do that is go into the sector summary, and in this case we're going to go back and we're going to go into the financial sector. So very quick, we see banks, then we click on them, and then we put them in StockCharts technical ranking order, and it shows us the strongest banks. And here's JP Morgan up near the top, but there's actually other banks that are doing even better than that. So nice technology, really quick, helps you focus in on big winners. And I think, the hard part is we get caught up in what they're talking about on CNBC or some interview that a CEO was on, and he sounds like the show's going great. I've never had a CEO tell me to sell the stock. I will say that when you look and see what investors are doing, and that's what the SCTR ranking is trying to tell you, I think it's very helpful to at least be aware, am I working with terrible stocks getting better? In a lot of cases, commodities go full cycle from terrible to wonderful, back to terrible, back to wonderful, and you have to trade them. Or you can be in a strong stock like Shopify or Nvidia when it was on its run, or the run Apple is currently on. And when the stock starts to take off, you don't have to trade it because they typically do well. But when Apple stops becoming a top performing stock, you might just want to sell it, move along, and find something else that's starting to outperform. And that's the goal of using this ranking system, is to try and find those winners and losers and try not to hold losers. So hopefully this is a much more disciplined approach for you. Now, the big thing to remember, I talked that we have industry groups on here. We also have ETFs, and the benefit of using the ETF Scooter ranking is to help you stay focused, and you're going to find a lot of the good ideas that you saw over on the industry group dashboard also might show up in the ETF group. So I'm sure up here near the top somewhere we're going to find some bank ETFs and that kind of thing. KRE, here's Invesco KBW Bank ETF. You'll also find gold's been an outperformer this year. But you'll see right away these names come to the top. We see semiconductors here, semiconductors here, semiconductors here. We go in and look at the SCTR for semiconductors. There's lots of them that are in the top 25%. So with that knowledge, we can at least focus on what's working well. So use these two components, both the ETFs and the US industries, to help direct your attention, because some industry groups might not have ETFs representing them that well, either due to size or whatever. So we have a couple of home builders ETFs, but we don't necessarily have it broken down quite as clearly. When we go in and look at it specifically under an industry group, we're going to be able to go in and grab that kind of information very quickly and find out which stocks are starting to lead in the group. Thanks for taking the time, and head over to gregschnell.com for more information. Thanks, everybody. Bye-bye.